to the second edition of Chart Your Trade's 3-minute market wrap-up video. I'm your host, Michael Lamott, and today I'm going to try to keep it to 3 minutes. We will see. Um, Today we'll be discussing the QQQ, which is the ETF that more or less tracks the NASDAQ, and we are going to compare that to the Chart Your Trade MRI scanning results. If you're unfamiliar with the ChartYourTrade MRI scanner, it's a scanner that we created in-house to scan for the best growth stocks in the market. We actually wrote a great blog post about how to scan for the best growth stocks, and we will include a link at the bottom of this video if you care to read about that. So let's dive right in. Here is a weekly chart of the QQQ. We can see here that it has closed at the top of its range for the past 6 weeks, and right now it is trading right below its 40-week moving average, and it's also trading right below what may turn out to be resistance. We see here 108.73 was a level of resistance back in September of 2015. It finally broke above that area of resistance, and then it turned into a support level throughout November and December, and then it came crashing back down. So the question that we have in front of us is, will the 40-week line act as resistance? Will this former level of resistance at 108.73 act as resistance again? To answer that question, let's take a look at the daily chart of the QQQ, and then we'll take a look at some of the results from the MRI scanner. So what we're seeing here on the daily chart is that we've basically rallied since mid-February. We actually took up a position in the QQQ thanks to the Fine Leading Stocks Advanced Report Model Portfolio on the 17th, and since then the QQQ has ridden along the 21-day exponential moving average and the 10-day exponential moving average. Very similar to the weekly chart, it is butting right up against its 200-day moving average, and we also see this red dotted line here, which is the same area of resistance that we saw on the weekly chart. So the question at hand is, does the QQQ have the mojo to keep on running? Or if we take a look at this weekly chart once again, is it forming a potentially giant head and shoulders with the right shoulder starting to form right over here? Well, if we do have the mojo to continue moving forward, theoretically, we should be seeing a lot of growth stocks passing our scans. The ChartYourTrade MRI scanner is developed to scan the market for the best of the best growth stocks, and as more stocks pass our scans, the greater the health of the market is. So when we were just getting into new highs last year, we saw that there were triple-digit stocks passing our scans, and since then it has really declined. We have seen some improvement over the past several weeks. Since mid-February of stocks passing the ChartYourTrade MRI scanner, but yeah, if we compare 38 to 115 around the same time last year, far cry from what we would consider healthy. So at this point, I'm still very light in the market. I am not seeing a whole lot of quality that is setting up, and so I'm very cautious right here. And based on what I'm seeing from this ChartYourTrade MRI scanner, and from what I'm seeing from the action on the chart, still want to be relatively light and see if we actually do continue to run up. I'd still hold the existing position, but caution is king for right now.